Hello everyone. So right before the break we have the honor to have Miko Matsumura. Miko is the founder of crypto exchange Evercoin, a general partner with Gummy Cryptos, a venture partner with Bitbull Capital, an advisor to Arrington XRP Capital, and an LP with Focus Ventures. I need to breathe. He holds a master's degree in neuroscience from Yale University. Miko is a very popular keynote speaker, so sit back, relax, and enjoy the show. Thank you.
Okay, thank you very much. Very excited to be here in Barcelona. Today I'm going to talk about open source money. But first, I'd like to talk about what I call peak extraction and peak centralization. So we've reached a unique period in human history, which is we've reached a point that I call peak centralization. And I think people who come from decentralization overestimate the power of decentralization, and they underestimate the power of centralization. And to be frank, centralization has taken us a long, long way. Centralization is powerful and amazing. And just to make my point, if you think about the concept of trust, think about trust as a slider. So you can move the slider all the way to 0. And in the immortal words of Fox Mulder from the X-Files, you can trust no one. So you can trust 0 parties. And the thing that you get is you get Bitcoin. Now here's the interesting thing is if you are doing the Bitcoin blockchain, you are now transacting at a rate of 7 transactions per second. If you can move the slider from 0 to 1, if you can just trust one party, I can give you hundreds of millions of transactions per second. I can just have a huge centralized database, and it's going to transact as fast as just about any meaningful business application today. So trusting even just one party gives you so much power. So I just want to provide a small perspective. So I have a background in neuroscience, and before I began working in the blockchain space, I actually had a small seed stage venture fund for AI, for machine learning. And one of the things that I realized in that process is I realized that right now, AI is not your friend. So the thing about AI that's amazing is that AI is, people radically overestimate the capabilities of AI. So people think that AI is sentient. They think it's Skynet. They think it's incredibly smart and devious. And in fact, it is not. The best way to approximate today's AI is if you use Excel. There's a cool thing called the Excel solver. And the solver, you basically highlight a box in Excel and you say, by manipulating these boxes, try to maximize the number in this box. And Excel will automatically start moving these numbers around, and it will come up with the solution, right? This is the Excel solver. And what I want you to imagine is I want you to imagine the economic result of 100 million Excel solvers solving every business optimization problem that you can imagine. This is what I call the extraction economy. And probably the simplest kind of example would be that your attention is being harvested by AI bots that show you advertisements on Facebook. So AI is probably going to be the largest single contributor to wealth inequality because of the property that it has of extracting value from every corner of the economy. But the problem with the extraction economy is that people have had it up to here with extraction. If you squeeze an orange, you're going to get orange juice, which is a good thing. But if you keep squeezing it, there's a certain point where there's no juice left in the orange. That is what peak extraction looks like. We're really reaching the limits of how much juice can come out of this orange. And that is the current precarious state of the global economy. So, this is a chart of the S&P 500 since Donald Trump was elected as US president. It's been climbing, right? We've reached a very high point in the economy, and yet some of the primary indicators, such as the Treasury yield curve, has inverted. The longer we see inversion of the yield curve, the more precarious the economy appears, and the more likely it is that it will be predictive of an upcoming correction or recession. This economy has variously been described as a sharing economy, as a gig economy, or as a surveillance economy, according to this recent book of that title. But if you study these phenomena carefully, why are people sharing? They're sharing because they've run out of money. Why are people sharing a room in their house? I don't think they would share a room in their house if they could make their ends meet. Why are people driving Uber? Because they can't find normal employment. So this is all under the concept of the extraction economy. And as you can see, Facebook stock has effectively been a mirror of this inexorable climb to this great economic height that we're in. And as you can see, Facebook stock over a period of almost a decade has approximated a straight line. And only recently was there a significant correction. And the correction is attributable to the limits of human privacy that they're allowed to abrogate. And of course, other symptoms of peak extraction is power is derived by getting attention. And we have in the US a Twitter president who is basically the peak expression of trying to grab people's attention and get the power out of the attention. Another interesting symbol of peak extraction is, this is Mohammed bin Salman of the House of Saud, and then Masayoshi-san of the House of SoftBank. And this is them essentially transferring $100 billion into the SoftBank Vision Fund. What we're seeing is that we've reached the peak of oil extraction, and now we're moving towards the peak of knowledge, information, and attention extraction. That's basically where we have arrived. So, we are at an unprecedented altitude in the economy. And I do want to provide a quick caveat. If you have a fear of heights, you can close your eyes because this next part is a little bit dizzying, and it's about how high we have reached in this economy. So imagine that you're a person standing in a very high place. Our economy is in a very high place, and yet we do have the potential to fall from this high place. Imagine now that you're standing on a metal beam. And now imagine that the beam that you're standing on is known to collapse. This beam is known to collapse. And in fact, we've seen it collapse before. So what I want to say is, in 2008, we saw the global economy collapse as a function of over-centralization because of banks that were too big to fail. And yet, they did fail. And the thing that I think is intriguing is, what is the value of having an alternative beam? Let's say that someone put an alternative support system next to you on this rail. What would be the value of that alternative? So, what I'd like to do is ask a rhetorical question of, is this a good investment? So I'm going to grab the punchline immediately, which is, it actually is not, because it's Lehman Brothers. And so Lehman Brothers approximated tulip mania, which is that what you see in tulip mania is you see an exponential increase in the price, and then you see a crash to zero. And in tulip mania, the price stays at the nominal value of the underlying asset, which in this particular case is zero. So it falls down and it stays down. I just want to make a side note that Bitcoin doesn't seem to do that. It is not tulip mania. It goes down and it goes up even higher. So, September 15th, 2008, the collapse of Lehman Brothers, 600 billion US dollars of balance sheet erased in a very short time, the largest bankruptcy in human history. So, if you ask Bill Gates, will the US have another financial collapse? It is a certainty. We will have a collapse. And the beam that we're standing on is known to fail. And what are the implications? So let's take a look at the credit easing balance sheet of the United States Federal Reserve. So if you look at the fall of 2008, which is September 8th, you're going to notice that the credit easing balance sheet has been permanently perturbed into a new normal. And as you can see from this chart, this is the Humpty Dumpty moment, and we're really never going back again. There's $12.3 trillion in money printing that's occurred from the US since that time. This is a projection from the United States Congressional Budget Office, and what they're projecting is they're projecting federal debt held by the public to exceed GDP by a pretty huge amount, but the problem is more in the shape of the curve, which is it's exponentially increasing. So we're reaching an unprecedented point in human history. And yesterday on our stablecoins panel, one of the astute things that people pointed out is that we're not talking about stablecoins, we're talking about pegged coins. And what are the pegged coins pegged to? They're pegged to the US dollar. And the US dollar is known not to be stable. So since 1913, the US dollar has lost 95%. of its purchasing power. So, lest us think that it be stable, it is not stable. And one question I'm frequently asked is, how can Bitcoin increase in price more and more? So what I like to tell people is, if you're measuring the price in US dollars, you have a yardstick that is actually shrinking. So if you're in Alice in Wonderland and your yardstick is shrinking, the objects that you're measuring appear to be growing, and they'll continue to appear to be growing forever. So I think that this is really about currency pairs. And I think pegging to the dollar will be a temporary phenomenon on our way to equilibrium. So on October 31st of 2008, Satoshi Nakamoto published the Bitcoin white paper. And to me, when we talk about being in a high place on a beam that's known to collapse, the thing that's really interesting is, what is the value of having an alternative? And I'll say the value of having an alternative is twofold. The first value of having an alternative is that you can actually distribute your weight to the alternative. By distributing weight to the alternative, you may even prevent a collapse of the other beam if you're carefully distributing your weight. And in fact, what would the behavior be of a human in that situation if the beam they're standing on is known to collapse? The behavior you would see is you would see them transferring weight to the new beam that's made of an unknown material. How would that weight transfer occur? They would put a small amount of weight, and then they would take it off. Then they would place a larger amount of weight, and they would take it off. And then they would place an even larger amount of weight, and they would take it off. And that's exactly what you're seeing with the price of Bitcoin. 7 times in history, Bitcoin has decreased by more than 30%. And every time so far, it has then gone to an all-time high. So this is not tulips. And in fact, the way that I reason about it in the theme of open source money is I reason that the internet is now printing its own money. This slide I cribbed from Pantera Capital, a firm which I'm an investor in, and they think of BTC as basically like HTTP. They see it as an internet protocol. And in fact, it is really the beginning of money transfer protocol. And the thesis that I have behind open source money is that open source money will consume all money. And the reason I have confidence in this thesis is that over the past 30 years, I've watched open source software consuming all software. Now, let's reason about it correctly, which is when open source software takes over a function, that software is now a commodity. It's the process of commoditization and lowering the cost of infrastructure, and thus enabling increased access, increased inclusion, and increased innovation on top. So now 90% of the software that you see that is commercial is open source software. However, proprietary software continues to exist, and proprietary software companies in aggregate have more value than ever in human history, which suggests to me that proprietary money supplies will continue to exist. And in aggregate, the value of all of the proprietary money will be higher than it's ever been, thanks to open source money taking over some of the most primitive applications, such as payments, things like remittance, things like bank-to-bank money transfer, very simple applications like storing value. And the reason why something like a Bitcoin is the antidote to the extraction economy is that Bitcoin removes the extractor. So if you're a participant in the bank of Bitcoin, you are a user. But as a user of the bank of Bitcoin, you own stock. You own stock in the bank of Bitcoin proportional to your use. And aside from miners, who I don't consider to be the owners of the bank of Bitcoin, they are servants. The miners are serving the users. But if you look at the equitable distribution of incentives, it's essentially a user-owned collective or a cooperative in the sense that it does not have a profit motive and it doesn't have a profiteer. So that is how I reason about how open source money is the antidote. So what I wanted to share with you is a little bit of a visualization about open source money. So this is Satoshi Nakamoto. So the green blob there is an account, and what you're seeing is you're seeing the SourceForge open source repository. This is not an artistic rendition, this is data visualization. Open source is great because it's open, and the entire history of every code check-in ever done on Bitcoin is available for anyone to download. So what you're seeing is you're actually seeing that's the photographic representation. That's actually Gavin Andresen, who is a non-pseudonymous US citizen who is known to be the successor to Satoshi Nakamoto. But what you can see is you can see how open source software evolves. And what you're going to see is you're going to see that it has a quality of exponentiality, right? I think one of the things that people say about, so now it's starting to cook, right? So people have complaints about open source money, and the complaints that they have are frequently about features. So what they're saying is, oh, it doesn't do this, it doesn't have this, it's not good enough, I can't use it, it's too complicated. And the point is if you think that those features are static, then you misunderstand software. And so what I would like to encourage people to do is don't misunderstand and don't bet against software developers. Because if you bet against software developers, you will lose. History has shown that you will lose. And the thing that is happening here is replicated across thousands of different cryptographic assets in the form of an evolutionary matrix. But what I would like to suggest to you is that this evolutionary matrix is of a nature that is different from extractive capitalism. And the reason why I assert this is that you can see that over the past 30-year history of open source software that we have actually seen a reversal of what is traditionally known in economics as the tragedy of the commons. If you just study an open source repository like GitHub, you'll see that there's what I claim to be 1 trillion worth of software that's now there being given away for free. Now, if you look at it from the perspective of the GDP, the value of that software is 0. But I don't think you can claim that open source software has no economic value. It's just not being measured properly. So the point that I'm making is this, is that open source software is a matrix in which projects compete for consent. And since historically there's been no economic model other than volunteerism, open source software competes for the consent of the creators. It competes for the consent of the application developers who use it, and it competes for the consent of users. And the competition for consent means that the projects that have the most consent of its community thrives. And of course, if you're unable to get consent, then you die. So for example, Satoshi Nakamoto could have created a 1% tax on Bitcoin that goes to his personal wallet. Of every transaction, 1% goes to his personal wallet. And what would have happened is someone would have forked Bitcoin, created a tax-free version of Bitcoin, and everyone would migrate to that version. So the point that I'm making is, of course he did not do that because he understood that Bitcoin was going to compete for the consent of users. And that's the economic force that drives inclusion. So I think that is an exciting potential. So we've reached a point which I consider to be what's called the Netscape moment for cryptographic assets, and that is Facebook's Libra. 2.5 billion monthly active users being included in this global emerging phenomena. And I think people have many complex impressions of Facebook, but what I can tell you is that from my perspective, this is what they had to do. And the reason Facebook is forced to do this is that Facebook has realized that they have reached the peak of extraction, which is that Facebook can no longer increase its user count exponentially. They cannot move from 2.5 billion monthly active users to 20.5 billion users without adding a whole lot more fake users. And further, Facebook is unable to target ads even better than they do now because it's already exceedingly creepy. So the point being that they have reached the limit of extraction, and now they are forced into this move into open source money. And lest people be concerned that government regulators will stop Facebook, government regulators can stop Facebook. Government regulators can stop Libra. But government regulators cannot stop open source money. So that's it for me. Thank you very much.